Hey, this is Arthur Hill, Senior Technical Analyst with StockCharts.com. It is Tuesday, August 7th, and you are tuned in to On Trend, the show designed to keep you on the right side of the trend. Today, we're going to show a little preview for my ChartCon presentation on trend following. We're going to look at big chemical stocks leading the materials sector, and then we'll show you 4 unique breadth indicators available to the materials sector and the other sector SPDRs. We'll talk about playing throwbacks, mean reversion bounces, and I'll show you how to create a chart list from a CSV file. Trend following and a ChartCon preview. ChartCon 2018 is just around the corner. It's going to be on August 10th and 11th. We got a great lineup of speakers. You're definitely going to learn a lot. I'm going to be speaking on systematic techniques for trend following and risk management. Basically, I'm going to show you how to implement a trend following strategy step by step. We'll start with some trend following indicators. What are they? How do we take signals? Then we'll show you how to set expectations with backtest. What is the expected return? What is the expected drawdown? What is the expected winning rate? We'll also show you how to mitigate stock market risk. And finally, I'll show you some techniques to increase returns and winning percentages. If you want to register for ChartCon, you can do that on the Stock Charts website. Here I am on the free tools page, and there you can see a banner, and just click that register button. You can scroll down to find out more about the speakers and the event and how it works. You don't even have to be there really to take advantage, because the recordings will be made available to everyone on demand afterwards. And if you look at the list of speakers, you're bound to learn a lot. Dr. Alexander Elder, Martin Pring, myself, David Keller, and Tom Boley, and Greg Morris, and the list goes on and on. Big chemical stocks lead the materials sector. All right, now I want to turn to the materials sector because it got a bounce and is holding support. Now I'm going to start with a weekly chart so we can get some perspective here, but there's this huge move from 44 basically to 64, and then we had a pretty hard correction that formed a falling wedge, and you can see we retraced around half of that prior advance, which is normal. And then we got a nice little breakout, but not much follow through because we fell back after the breakout. But what keeps me net positive on XLB is this support zone around 57.58 is still holding. And until it's broken, until we get a close below 57, I consider that breakout bullish. In other words, it hasn't been proven otherwise. You can also see that the PPO 1040 is positive, which means the 10-week EMA is above the 40-week EMA. And now we'll turn to a daily chart for a little more granular perspective. All right, so now on this daily chart here, you can see, first of all, there's that 52-week high, and then there's that wedge we were talking about. And you can see we've tested this 57.5, 58 area at least 3 times. And so it would take a close below this zone to negate that. And you can see the RSI moves above 30 to get these oversold bounces working. And again, as long as we hold this support zone, and I'm going to say it closed below 57. If we close below 57, then I turn bearish on XLB. But one thing you need to notice about XLB is look at the top components, okay? Dow DuPont, the big chemical conglomerate, is basically 22.5%. But you can see there are a lot of other chemical stocks in there. ECL, LyondellBasell, Air Products, PPG, and also FMC. And I saw those charts making some pretty big moves over the last couple of days and wanted to highlight a few of those. And the first one that we need to focus on would be, of course, Dow DuPont, because it's almost a quarter of the ETF, the SPDR. And I've got the 255-day price channels. And you can see when we move above those price channels, we were hitting 52-week highs basically into January. And then we had the hard correction, and that's why XLB fell. But you can see we've made higher lows in April, May, June, July, and now we're getting this bounce in August. And we had this little gap down, and we're filling that gap. So it looks like Dow DuPont wants to move higher, and if it moves higher, that of course is going to be positive for XLB. Now this stock here is Lionel Basel Industries in VE, and I do believe it is an ADR. But look at these new highs. It's a big chemical company. September, October, December, into January. There's the correction. Then we had a breakout, and you can see a throwback to this breakout zone. So this breakout zone becomes support, and you firm for a few weeks here, and look at that surge over the last 2 days. So it looks like this chemical stock is ready to bounce, and that could help the materials sector. Next up, we have Air Products, and this one has just kind of gone sideways. You know, first it was hit hard there in January, February, and then it basically bounced around, and this is a consolidation which formed like a big triangle. And if you look at a weekly chart, you'll see a big advance leading up to this consolidation. So it could be just a big bullish continuation pattern. Now, what's got me interested in Air Products is look at that gap surge and breakout. And we have a little throwback here to this breakout zone. In fact, I could put this in one of my segments coming up, which is on the throwbacks. But basically, a throwback is when you get a surge and then you get a pullback to that breakout zone. And this could hold, and we could see a continuation higher. Next up is Ecolab, and Ecolab was hitting 52-week highs up until January, got hit really, really hard, but look at that, bounced right back and hit 52-week highs in March and April. And then it had a correction back to this breakout zone here around 138, 140, tested support again with that dip into July, and look at that surge we've had in July, August here, and a breakout. So it looks like Ecolab is headed for new highs. Here is Eastman Chemical, and again, like we saw in the other charts, new 52-week highs, and this one even hit a new 52-week high in March, and then corrected here, and it started to firm in June, July in that 100 area, and it looks like it got a little breakout there, so it could be poised to challenge the resistance line there from that triangle. By the way, if you're not sure what sector or industry group a stock belongs in, there is a checkbox just below the chart, and it is for full quote. And if you click that box and then update your chart, you're going to get a window at the top. And this window is going to show you the sector and the industry group associated with this chart. So you can see FMC is materials, specialty chemicals. And we can see a pretty sharp decline there into March. But look at that surge and breakout there in May. And then it's kind of corrected here. And if we get a breakout at 90, I think this one is going to be headed towards new highs. And the last one here is PPG. Now, this is probably the weakest of the group because it almost hit a 52-week low there in May and June. Not quite. This is the 255-day price channel, and that lower line is a 255-day low. It did hit a 255-day high there in January, though. But what's got me interested is look at that gap and breakout. All right, and basically have a surge from 100 to 111, and then we have like a flag working here. So it's a high and tight flag. And if we get a breakout there at 111, I think that's going to be bullish and signal a continuation higher. Now, what's interesting about all these charts here is they're all related to the chemicals group, and they're all in the materials sector, and they're all showing strength. So we're seeing money move into this group. So it's not just one or two stocks, it's several in this group that are participating. And I think that makes the move more important. 4 unique sector breadth indicators that you can use on your charts. All right, so I've got a chart here with materials SPDR, and I want to show you a really great way to analyze the sector SPDRs and also some of the major indexes, because you can apply a number of breadth indicators that you can find here on stockcharts.com, very unique breadth indicators. So first of all, I've got XLB in the main window with the 50-day EMA and the 200-day EMA. And we can see there's still a bit of a long-term trend working here. It's flattened over the last few months, but the 50-day EMA is still above the 200-day EMA. And then below, I've got some of the indicators there. Now, the first is just RSI, 10-period RSI, to look for overbought and oversold readings. And you can see there we had a bit of an oversold reading there in the middle of June. But the real gist of this is to show you these breadth indicators and how you can use them for the other sector SPDRs as well. So at the top, I've got the percentage of stocks above the 20-day EMA. And all those symbols begin with exclamation point GT20XLB. And then they just change the sector SPDR symbol to change the indicator. Basically, if you want technology, change that out to XLK. If you want industrials, change it out to XLI. And so we can use this indicator to see when XLB becomes oversold or overbought. And I'm really only interested in oversold readings. So you can see when we go below that 20, that 30 level there, we're oversold in February, March, and April, and then there in June and July. The other one is the 10-day EMA of 80%, and we can use that to measure a breadth thrust. All right, when you get a move above plus 30%, which is that red line there, you've got a bullish breadth thrust, and that happened in April, and we had a couple more along the way. So that tells you this is still net bullish, this indicator, and it hasn't moved below minus 30%, which gives you the bearish breadth thrust. And we had one of those in February and again there in March. Now this indicator is $XLB ADP, and the only thing that changes, of course, would be the XLB part if you want technology, $XLK ADP. Next up, we have the high-low percent indicator for XLB, XLB-HLP, and we can see that it hasn't done much really since February. You know, a number of readings above plus 10% from September to January, and then it's kind of just been fluctuating above and below zero. And the important thing is it hasn't moved below minus 10%. So when it moves below minus 10%, that tells you you've got a lot of stocks in that sector in strong downtrends. But we haven't had that yet. So even though it's basically flatlining, it isn't bearish yet, because the last signal was that move above plus 10%, and we don't have a countering negative signal. And then finally, we have the percentage of stocks above the 200-day EMA, and you can see that there. And I also added a 10-day EMA to this indicator. And you know, it was holding above this 60% level for the most part until March. And then you got below 40% a few times and then back above. So it's been kind of erratic. All right. But right now it's been holding above that 40% level. And I think that gives it a slight bullish bias. And if you move below 40%, that would mean that 60% of the stocks in that sector are below the 200-day EMA, because 40% are above. Then that would be quite negative for the sector. Now, if you want to see the settings for this chart, there they are below. I will also put this chart in a written commentary tomorrow with a link so you can click on it and you can save it to your favorites list. Playing mean reversion bounces, the biotech SPDR, HACK, the semiconductor SPDR, and QQQ. All right, now I want to highlight a few mean reversion trades that are working. And the reason they're working is because we've already had the RSI move above 30. Now, the first two are going to be from major index ETFs, QQQ and MDY. With the major index ETFs, I typically use RSI 5 because they're fairly broad indexes and they're a little bit slower moving, less volatile than an individual stock or an industry group ETF. For an individual stock or an industry group ETF, I'll use RSI 10 because it's a little less sensitive. You can try both of them, see what works for you. But as far as this system is concerned, basically, if there's a long-term uptrend, you're looking for RSI to dip below 30 to become oversold, and then the signal occurs when you move above 30. That's when the mean reversion is starting to happen. So the mean would be the uptrend, and you're reverting back to the mean when you cross above 30 in RSI. So we had a nice signal there at the end of June, and then a sell when we moved below the chandelier exit there at the end of July. So that was a nice trade. And then we had a nice signal here at the end of July, and we're getting a nice bounce. And we've just closed above the chandelier exit. So what does that mean? Well, that means now it's possible to have an exit signal because the exit triggers when you close below the chandelier exit. So that means you have to first move above the chandelier exit. All right, so now if we close below the chandelier exit, that would suggest exiting this trade. So here's MDY, and I've got the signals here. Here you can see we became oversold after this gap down, but as happens sometimes, you continue lower after becoming oversold, and you don't get your sell signal until you cross above the chandelier exit, which didn't happen until March, about a month later. And then we moved above the chandelier and closed below it for the actual sell signal. So as far as the current signal is, we became oversold there at the end of July and bounced up. So there was the buy signal. And now we've moved above the chandelier exit. So if we close below it, that would be the exit signal. Here is the HACK ETF, and I highlighted this one on Friday, and I think before that on Thursday. But you have a resistance zone that becomes support, and then you test support in June, and you test it again in late July, and look what happens when you're testing support. RSI moves below 30 and then above 30, so we've got a mean reversion bounce. I think the long-term trend is up. There you can see there's that uptrend, a 52-week high, and so HACK is getting a nice bounce here. Here is the biotech SPDR, and it's got support here in that 93, 94 area from the June low, and now here in July, August. And you can see we came down, RSI became oversold, and we're moving above 30. So it looks like a mean reversion bounce could be in store for XBI. Now what's interesting about biotechs is large cap biotechs have started to lead again. If you look at the holdings and you compare XBI to IBB here, you can see IBB is dominated by the large biotech stocks. Okay, Biogen, IDEC, Amgen, Celgene, Gilead, Vertex, Illumina, and Regeneron. But if you look here, you can see they were underperforming all the way until early June and then started flattening out and have been outperforming over the last 2 months. So this is an interesting change in the relationship between those two. And the last two are the semiconductor ETFs, which are getting mean reversion bounces. There you can see XSD. It's a pretty choppy uptrend, but it's clearly an uptrend because you have higher lows working here and you have clearly higher highs and a 52-week high there in June. So you came down really hard, became oversold, and moved above 30 for RSI, and it's staying. All right, even though we've had this little pullback here, look at that surge over the last 2 days. So it looks like semiconductors want to move to new highs again, the semiconductor ETF. And what I'm noticing is a lot of strength coming in the semiconductor equipment group. Okay, AMAT, Applied Materials, Lam Research, LRCX, KLA Tencor, KLAC, and some others, ASML as well. So check those charts out. And here is the semiconductor ETF SOXX, and we can see that oversold reading in late June and is continuing this bounce. Looks like a rising wedge, which could be a counter trend rally after this decline, but you know what? It's rising, and I think that's a positive for the market when semiconductors are rising. And unless SOXX closes below 180, I will stay bullish on semiconductors. And again, that's positive for the technology sector. Playing the throwback, we'll look at Honeywell, USB, and Danaher. Now, the throwback is a technique that you can use if you have a breakout and you think the stock has gotten away from you and you want to wait for it to pull back. And the question is, where do you expect it to find support if it does pull back? Well, for a throwback, you would kind of look for a broken resistance zone and consider that that turns into support. That's a key tenet of technical analysis. So here on USB, you can see that resistance zone, and there's a pretty strong move from 50.5 to 53.5 that gets a breakout. We had a little bit of a one-day throwback and then a bounce. But, you know, the support zone is 51.5, 52, so that's the ideal zone. If you move into that zone, then you might want to perk up and look for a bounce off that level. Another one that I see here is Citrix Systems. All right, this is the cloud computing software group. And look at this resistance zone, and you got the breakout, and there was a gap, and you had a move above 115, and now we pull back to this breakout zone, and that looks like it's going to become support, and we got a bounce of 1.5 percent today, so it looks like this bounce could be poised to continue. Now, Google is another one that had a big surge and a breakout, from about 1100 to 1275, and you broke above this resistance zone here. And you can see this breakout zone turns into support. So if Google comes into that 1175, 1200, I think that's the level to watch for throwback support, if you will, and a potential bounce to continue higher. Danaher is another one to watch. There we can see this resistance zone, but the one I'm watching is the gap and breakout within this symmetrical triangle, because you can see a little resistance zone there, and you got this throwback, the second one, to that 100, 101 area, and it was up about 1% today, so it looks like it's trying to bounce off that breakout zone, which would be the throwback. And Tom Boley also highlighted Danaher in Market Watchers Live yesterday. And as always, don't forget, if you have any questions, comments, or feedback, please send an email to askarthur@stockcharts.com. I cannot answer all of them, but I promise I do read them. Creating a chart list from a CSV file. Now I'm going to take you through these steps required to find the components for a particular ETF, or it could be an index, put those components into a CSV file, and then upload that CSV file to a chart list. And this is really helpful if you want to scroll through the components of a particular ETF, such as the retail SPDR or the semiconductor SPDR. And we're going to use a semiconductor SPDR for our example. Now, the first thing we need to do is to create that chart list. And I'm on the free tools page, and I'm just going to type in a symbol to get to the Sharp Charts workbench. And from here, I'm going to click Edit List. And that's going to put me in the chart list workbench, basically. Now, for the name, it needs to fit with my other chart list. And to see those other chart lists, you can select that list drop down there. And you can see I've got my chart list prefixed with a numerical prefix, 1000 for major indexes, 2000 for market indicators, 3100 for sector ETFs, and so on. And I want to create a list with stocks in the semiconductor SPDR. So I'm going to preface that with 4200. That's going to be my industry group stocks. I'm going to go over to the new list, click new list, and then I'm going to type in 4200 semiconductor SPDR and click OK. And so now I have a brand new chart list, and I can go find the components for the semiconductor SPDR and put them in that list. In order to find the components, we need to know the provider for the ETF. And if you look at the name of the ETF, it says SPDR, and that would be the provider. If I go, for instance, to IHI, which is the healthcare iShares, you can see there it's iShares. And you want to go directly to the provider to find the ETF holdings. So I go over to Google, and I'm going to search SPDR XSD holdings. And there you can see at the top I get US SPDRs. Now there are other links, Zacks, ETF, Yahoo. Don't use any of those. Go directly to the ETF provider by clicking the SPDRs. So when I click on that link, you can see you will get to the semiconductor SPDR page. And if you click holdings, you can see all the holdings and the weights for those holdings. At the bottom left, you're going to see a link for download all holdings. And I'm going to click that link, and I'm going to save that to my downloads folder. So once it's in my downloads folder, I'm going to have to open it up. So this is the file downloaded from the SPDR's website, and the only two columns that we need are the name and the symbol. So I'm going to go ahead and copy those, and I've got a new worksheet, and I'm going to paste those over. Now it's important, the symbol needs to go in column A, and the name needs to go in column B. So I'm going to go ahead and paste this into column B, because I'm going to get the name in column B, and then I'm just going to move the contents of C over to A. So now I have the symbol in column A and the name in column B, and I can now save this as a CSV file. And then I can choose File, Save As, and from the File Format section, I can go down and I can choose CSV File. And I'll keep the same name and click Save to save that. So now we're going to return to the chart list that we just created, 4200 semiconductor SPDR, and we're going to scroll down and we're going to choose Upload CSV. And then I'm going to choose to select that file, and it's in my Downloads folder. I'll click the CSV version and choose Upload. Those symbols and names will be uploaded. I will see them there on the left, and I'll click OK to add those to my chart list. And you can see I've got a new chart list with 34 stocks from the semiconductor SPDR. Once we have a chart list, there are a number of ways we can view this group. For instance, I could go to Summary View and I can see all the semiconductor stocks on one page. I can sort them by the rate of change to see which ones are outperforming for this particular day. I can also go to the left and I could change this to 1 month to see which ones are outperforming over the past month, and then which ones are underperforming over the past month. You can also view this list as a candle glance chart list, and that'll give you 30 small candle glance charts per page, which is a really good way to scroll through and analyze the stocks in a particular group. So I pinned an article this morning on Gilead as it formed its fifth Bollinger Band squeeze. And here you can see the chart. And if you're on a chart on any of our articles, you can click on that chart and then you get the option above and below there to see the live version. So if I click on that link, I'm going to get the live version of this chart. And I'm going to go ahead and explain this Bollinger Band squeeze here. Now basically what you have here is you have a volatility contraction. And John Bollinger theorized that when you get a volatility contraction, that's usually followed by a volatility expansion. The only thing is you don't know the direction of that move that's going to cause the volatility expansion. So Bollinger Bands are kind of a neutral agnostic indicator. You have to kind of look for the breakout from the Bollinger Bands. But if you look at Gilead here, you can see you had the surge and then the contraction, and then that blue line's the contraction when the bandwidth dipped below 5% there, and then you broke below the lower band. And even though you had an immediate snapback rally, you didn't get above the upper band and you continued lower. Then we contracted again here to the blue line, and we had an upside breakout. And we had a couple of pullbacks, but we didn't break that lower band and we continued higher. So that was bullish there. Then we got another contraction in April and a support break and move lower. Another contraction there into early July, maybe late June, and a breakout. And now we've got another contraction as like a consolidation. Kind of looks like a diamond, but I think it's just a flat consolidation after a surge. But if you get a breakout to the upside there above that upper band, a close above it, that's going to be bullish. But if you get a break below, that's going to be bearish. Next up, we have F5 networks, and look at this advance from October until June, 115 to 180. And we had a little bit of weakness here, but it looks like a consolidation within an uptrend. And we got a nice big move today up 186. And if we get a breakout there, that opens the door to new highs. Next up, we have QRVO, and it is getting a consolidation breakout. Now, it's a very choppy stock, but you can see there's an upward drift to that trend in that chop. You know, the 50-day stays above the 200-day EMA, so that tells you that the bigger trend is up. We had this big move up, and what turned into be a pretty choppy consolidation, and that right half looks like a little triangle, and we're breaking out of that triangle today. And last but not least, we have Baker Hughes with a big inverse head and shoulders working, and we're getting a break above that wedge line. So that concludes this pre-ChartCon edition of On Trend. Don't forget to sign up. It's going to be a really amazing conference. You're going to learn a lot. I look forward to hearing from you. We're going to have a really nice interactive app from which you can ask questions. So thanks very much for tuning in, and remember to stay on the right side of the trend.